Hey, what's up, everyone? This is Bert the Nerd, doing a little something different this week. Trying to do stock kind of advice, kind of something I'm looking forward to at least once a month, if not once a week, depending on how many views we get on these particular type of investments. But I wanted to highlight a particular investment that I've been slamming the door on in the Discord. They just had a great earnings report, and I think there's some potential looking at some of the flags and kind of the reaction to the last earnings report for this particular company. So I do appreciate everyone's support. Do me a favor, hit that like button, subscribe, tell all of your friends about the channel, and let us get into it. Now, the company I'm talking about just had their earnings report, about a week or so ago. Actually, it was like 2 weeks ago. It's called Gorilla Technologies. Now, I don't know a ton about the specific kind of business this company does. I just know that for a long time, they were an Internet of Things type company. So, kind of like the trend a few years ago was if you're an Internet of Things type of company, is very bullish, is very hot sector. They now since positioned to more artificial intelligence, which is currently the hottest sector the past year or so. I would say that, and anything related to mining or cryptocurrency is the other number two hot. But this is a particular good company to look at. The market's really tough, right? We have a lot of these political just situations in all over the world. There's worries of overspending, which I think is a major worry here in the U.S. particularly, and out of budget type of thing. So when you look at the market, how that reacts to that, I mean, there's still a lot of uncertainty out there. You got to pick good companies. You got to pick growing companies as well. Can't be too scared, but you got to be careful as well. So kind of want to do this video to kind of go over what the company's about, what bearish type of things are going about it, what bullish things are going on about it, and what I think about the company in particular. So without further ado, let's get into Gorilla Technology. So again, this is an artificial intelligence company. Their niche is to improve security and operations through public and private entities. So for example, like a government, they just want, I don't know, put new cameras for stoplights or traffic signals. And so they're developing the technology to operate that, quote unquote, Internet of Things, kind of a Cisco type of company. Their major kind of things are infrastructure solutions in the Southeast Asia, which is their primary area of investment and growth. So it's not particularly like an American company. However, it is listed on the NASDAQ, so you can trade it. I just think it's a great company so far. Or actually, I don't know. We'll see if I think it's a great company or not. So some bearish kind of arguments against Gorilla. And now this is a really new company as well. I'm not sure the exact start date of the company, but their CEO is very emphatic. He's kind of an interesting kind of personality. Some have argued that he's oversold his company, that they're doing all these great things and blah, 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 but there are concerns about the company. Now, the bearish and bullish arguments are going to contradict themselves. When I was doing some research on this, I just basically, it's all the basic stuff for a growing company that might have a lot of bearish sentiment towards it, or just people don't really know about the company. But obviously, it's a newer company. There's balance sheet concerns. So there's concerns that they're going to have not enough cash on hand to pay off their debts or long-term debt, or they may have to issue stock. So there's that. There's always a potential for overvaluation. Now, I think that's the biggest thing with this company. You have to take in consideration that the PE, price earnings ratio, of a growing tech company is going to be a lot higher than, say, Taco Bell or Pepsi or Walmart, because the expectation is you're paying for that growth. So I'm always okay with paying for 100 times price earnings ratio for a startup type tech company that's only valued at $500 million, which is what Gorilla is, versus like PepsiCo, where it's probably going to be like in the 22 price earnings ratio, which I think is too high for Pepsi. It's kind of confusing, but it's two different animals. It's football versus baseball. It's points scored per game versus home runs a season, that kind of thing. So there's that. Another factor is Southeast emerging markets concerns. So I don't think that's just like a basis that a lot of investors have, is like America's the best place to do business and Europe's number two. All the other countries just kind of suck, right? So there's always going to be concerns about emerging economies like Southeast Asia, Thailand, Vietnam, Philippines, Malaysia, Indonesia, right? But there's a lot of money out there in the world, people. And on my travels to other countries, they are trying to get on that cusp of being kind of in the modern age. And it's not as prevalent here in the US, but it is growing a lot faster as far as technology, consumption, and um, money, all that. There is also short sale speculation. So these are all like pretty lame arguments, in my opinion. It's just someone was like, oh, I'm just going to look at all the potential bad things that could happen to any company in the world, right? But they didn't really give any specific details of why they thought this. We'll take a look at the balance sheet. We'll take a look at revenues and stuff like that later on in the show. But it was all just kind of BS kind of arguments towards the bearishness of the company. And I just think the price point right now with the latest earnings report, it's just it's worth the risk. And I'll go over kind of factors on how to protect yourself if I'm wrong. Next up, kind of fun stuff, bullish arguments. So this stuff's a little more specific. So huge turnaround in the last quarter one 2025 earnings report that came out a couple weeks ago, which is why the stock went from around 19.52 share to 27. On the backdrop of that, we had some issues with, world economy, specifically the U.S., with the debt ceiling, the budget, all that stuff was going on after the earnings release came out, which I think this is why it's a good buying opportunity at this point. They had increasing net income year over year, revenue growth year over year. There's actually a healthy cash position for where it's at currently compared to where it was last year. And we're going to take a quick look at that here. Give me 1 second here, because I want to go over what exactly we're looking at. Balance sheet. Okay, let's see here. So I'm going to share this real quick. Share this tab instead. Okay. So we're looking at, annual. Let's do quarterly one. So this is the most recent quarter that they did. So total assets aren't growing as quickly quarter by quarter, but that's okay. Total liabilities here, though, you're seeing a huge drop, 56,000 for liquid liabilities net minority. A little bit of a higher increase here in total equity gross minority, but total cap 103,000, growing from almost 30,000 as of last year. Let's see here. And then tangible book value is an increase there. Invested capital. So there's more investment capital coming in, whether that be via stock or via debt. Net tangible assets is growing. That's a good thing as well. Working capital, which is always a good thing. Basically, they have amount of cash to work with for different investments and to increase, the company. Total debt is decreasing from 22,000 to 19,000. But look at this huge drop from last year. Hopefully that's zero. That's always a good thing. Shares issued. Nah, it's growing a little bit here, but they didn't announce a new debt offering, or sorry, a new share offering this past quarter. They could, but I just don't think the market is really good to do that at this point. Let's look at the income statement here. So 1231 total revenue is increasing. Cost of revenue increasing a little bit here, but gross profit still in line. So it isn't really, oh shoot. Let's do the quarterly. So total revenue, look at that. It's increasing. Cost of revenue increasing a little bit. So that's okay. I think that just goes with profit. Gross profit is increasing quarter to quarter. I'm still okay with that though. Operating expenses are increasing a little bit. Operating income, it was actually down, but non-operating interest income was up. Other income expenses, that's not very good, but we have a tax provision here up quite a bit from the previous quarter here. Earnings per share. Let's see, earnings per share. Well, it was basically nothing, and now, it was close to nothing. Now it's negative 23 cents a share. Let's see here. Total expenses are increased a little bit here. You don't like to see that. Net income from discontinued operations. That's actually a good thing. Let's see here. Earnings before interest, taxes, and that's not very good. I'll be honest. That's not a very good thing here. Let's see. Cost of revenue is increasing quite a bit. And then if we look at normalized earnings before interest, taxes, and deferred assets, 2009 57.32. That's actually down from the previous quarter here. So let's look at kind of more stuff here. Give me 1 second. Let's see here. Okay, taking some highlights here. So give me 1 second. Okay, so kind of keen on the highlights of the previous strong revenue growth, or the previous numbers from year over year. The company reported a significant 109% year over year revenue growth, 18.3 million in the first quarter of 2025. So that's good. They also reported earnings of 23 cents per share, a positive turnaround compared to a loss of $1.47. So that's basically $1.60 per share change in a year before. The company is providing guidance, which is always good for a growing company. Expecting 100 to 100 million in revenue, between 20 to 25 million EBITDA. They also offer some visibility in 26, estimating a backlog of 70 million. So meaning to say that they're working on projects and then they have a backlog of 70 million already for 2026, which typically, if you have a backlog, that means you're receiving contracts. You may have to issue new stock as possible to suffice to entertain those contracts, but it's a backlog versus like not having a backlog. It's always good. Robust pipeline. I mean, that's kind of like, I'll take that with a grain of salt. That's cool that they talk about that, but the company reduced its debt and it has a healthy cash reserve, which improves financial stability. So it's not like they're relying on any debt to keep the operations going, which is good. They did miss on some stuff, so missed revenue estimates. While revenue grew significantly, it missed the Zach's estimate of 8.7%. Potential for execution and risk management issues. One article mentions a lack of earning visibility and persistent negative operating cash flow risks, but that's not the actual. That isn't the actual fact as of right now. So really good stuff. I think I misinterpreted the income statement a little bit there, but I think it coincides a little bit better with the bearish arguments there. Now, the article that I just looked up on Google was a little bit. I don't think it was biased at all. It just gave out the information. They're basically doing better than a year before significantly, and they're projecting for higher revenues in the coming year of 2025. And they're talking about a backlog of 70 million they're talking about a backlog of 70 million in projects or what have you. So I think that's really good. Let's take a real quick at just kind of Grrr's financials. Like market cap, all that stuff. And this would be kind of important to look at if you're wondering about growth and all that good stuff. So the past year here, this stock, I mean, in March, this was at $42 a share, which is really good. And we're now trading around. Oh, sorry, I didn't share that. We're trading around kind of where it was last year or I guess at the beginning of the year. And you're seeing kind of a trend here that was a little bit lower. I don't know exactly what happened here. I'm not really going to look into that. But if you're a technical trader, we could hit this point again. And what I'm seeing here is there was growth in this whole quarter. So is this a $42 stock? I don't think it's a $42 stock in the next 3 months. It could be a $42 stock by the end of the year. I'm not sure. But that's just kind of some good stuff today. This is a very small company. It's only 427 million. So if you look at potential risks, right? Not a lot of hedge funds or bigger companies can invest in a company that's only worth $500 million. Sounds like that doesn't make any sense. But if the market cap can grow over 500 million, that opens up the books for potential bigger investors like your Fidelities, your hedge funds, what have you, are going to be able to invest in a company that's worth 500 million. So if this company is worth 500, or let's say $1 billion, that's going to double the share price. So So it's a lot easier for this to grow. I'm not like a short sale or like short squeeze type of speculator, but it could run into that kind of situation. And I'm not even going to look at the short sale like methodology in this particular company, but let's look at the holders of the company. So a lot of it's, from what I read, that's odd. So institutional investors own about 11% of the shares. 2.5% is only held by insiders, but I think that's okay. You're not going to see a huge run up based off volume of like, again, short selling, all that. 58 number of institutions holding shares. So this could be individual investors. This could be, whomever. It could be retail. I think the majority of the shares in this company are held, held by retail. So that is kind of a going concern for if, retail is the most, I don't know, they're the most afraid, or they're the most sensitive to moves to the downside. So if you see a big downside push, it's probably retail getting scared for whatever reason of a potential news story or like kind of revenue thing. I just thought that was I wanted you guys to see that. So why I like it, I think the last quarter was awesome in every metric that they need to beat. And I loved how the stock boomed to $7. So it went from like 20 to like 27 the day after. And then it did kind of what a Reddit did, is it fell because, well, Reddit at the time, being very conservative, they were saying they were worried about kind of some revenue streams, but they've now since kind of gone to AI. I think the options are priced really nicely. I bought a couple call options for leaps around the same, basically like $2 over what the price is currently trading at the time. And those options are doing pretty well, but they're not going crazy. I think there's a little bit of hesitancy about this stock going to 27, but I feel like if you're willing to, risk a little bit, let's see. I mean, the stock's trading at 21.15. So my thesis kind of here is that if you believe that this move, sorry, it wasn't Friday. If you believe this move on Friday, June 20th, so literally 2 weeks ago, is still in the cards for the next like 3 to 4 months, or even 3 to 4 weeks, why not buy this at 21? Or if we have a dip down here to like 1989, which is what I did on Monday when I put more of a position in it, I don't think that's a bad entry level either. If this gets down back to like 1845, or let's see, if this does kind of an April swoon, if there's some geopolitical stuff, train this down to 1881, I still think that's still a nice kind of like either hold or add to your position there. That's kind of my opinion about it. But, to each his own. I'm not super bullish on this company. I think those metrics are they're not perfect, but I think the fact that they had such a strong quarterly report, investors reacted to it, and then what happened was the macroeconomics of the overall market kind of hit this stock. I kind of related to my Reddit position I took, or my Reddit thesis I took a while back. And I think there's a little bit of not as big of a risk reward if you got into this particular stock. So now what? You got a potential partnership with NVIDIA. There was some CEO went to the NVIDIA offices and he took a picture of himself in NVIDIA, which I thought was pretty cool. Is there a potential for NVIDIA partnership? I don't know, but it seems like that's a pretty good PR strategy. And with social media being so funny, I mean, he wasn't just there just to like shoot the shit. Southeast Asia is growing in the long term. I think earnings report the growth. I mean, who knows? Gorilla could be the Cisco Internet of Things of Asia, or Southeast Asia, I should say. Short term, I just love the reaction to the earnings. I think it's the potential to get into stock that maybe it's not like your $120 Palantir stock. I'm not comparing this to Palantir, but if AI is having a forefront of it, the CEO is doing what he's known for doing and just wheeling and dealing. I think there's some potential with Gorilla. Put a tight stop loss, maybe like 18 and a quarter if you're getting in on Monday, and just see what happens, basically. Now we're kind of talking about technicals. I had some people in the Discord or on Instagram kind of ask me like, how do I put a market or how do I put an order in for a stock? Well, there's two ways you can do it. So I'll kind of share that here in 1 second. So what's a market order for stocks, right? So market order is basically there's a bid or an ask price, right? And in between that, there is the market price. So let's say you're trading, Gorilla the bid is $20 and the ask price is 20.10. And you put a market price in, you're probably going to get that. You're going to get that stock price for however many shares you put between 20 and 20.10. Now, obviously, the more shares that you buy, you're going to get a more competitive offer, but the bidding may go up at the time that you enter that market order in. Now, there's a stop loss. So stop market order. So let's say you already have, let's say you have a position in Gorilla and you're like, my position, I bought at $20. I want to, if it goes below 19, I don't have time to watch the stock. But I'm afraid that it drops on 19. That is your threshold for holding the stock. Like, you don't want it to go under 19 because you just don't believe it. You just think it's a bad thing if it goes down to 20 or to 19. So what you'll do on your app, whether it be E-Trade, Charles Schwab, whatever, you'll enter in a stop order for $19. Now, the stop order has to be at least 10 cents lower than the actual bid price at the time. So you can set that for 60 days. You can set it for whenever. After the market closes, though, if you put a stop order on your stock, and let's say the next day, there's a really bad earnings report or a bad announcement, and the stock's first bid before the market opens is like 14.10. When the market does open, you do not take that order off. Your stop will be hit. So just be aware of that. I know it doesn't make really sense from like how I just explained it, but if you have questions about that, let me know. I'll try to help you out. Now, if you have a limit order, you can, or for limit orders, it's a little different. Let's say that the price of Gorilla is trading at, again, $20 a share, and you're like, you have the stock, and you are like, I'm good at 25. Anything over 25 is asking too much. I will want to put a sell order at 25. So you put in a limit order of 25. Let's say the next day the market opens and Gorilla goes up to 27. It will sell at 27 because your limit order is higher than the actual or is less than the actual market price of your stock. Inversely, if you're like, I really don't want to miss out on, well, you can put a limit order on a buy as well. So like, let's say that you don't like really where it's trading at. Let's say there's a kind of a gap between $20 and $20.50. Let's say you're like, per my kind of thesis, like I think Gorilla's valued at $20.10. You can put in a limit order of $20.10, and that will be the next bid price more than likely if that current bid price is at 20. But if the two markets don't meet each other, so like let's say the ask price doesn't fall down to $20.10, your order is never going to hit. But that is the best way if you're doing options to buy options. Never do a market order if you're doing options because typically the spreads are really far apart. Always do a limit price, whether you buy or sell. So I just want to do a quick little synopsis of how to like trade. I hope that kind of makes sense. I probably didn't explain it very well, but kind of did that on a whim there. But anyway, so I'm pretty high on Gorilla. I don't know if that'll change in the next week or two. I wouldn't say I'm longer term, but I'm definitely not short term on the stock. I think it has a lot of room to grow, especially since looking at I mean, they nailed that. They nailed that quarterly earnings report out of the water. And so again, if you think this is going to trade at 25, $26 a share, the point that it did trade at one day after the earnings came out, $21, like why not? Buy 50 shares, buy 100 shares, whatever. And if you're still scared about it, do a stop loss. And you're still questioning how to do a stop loss, hit me on my Instagram, put a comment in the section or in the comment section below. that is it for today. I hope you guys have a great day, and we'll see you next time. Take care. Bye-bye.